Welcome back. This Syntopia tutorial will be devoted to the first part of the income statement. The income statement is a table that essentially is like a small video of what took place in a quarter, what happened during a given quarter. The first part deals with the sales, how much in terms of value, how much did you sell of the different goods, and how much did you spend to make these sales possible. The first part of the table, which we will cover, goes from standard sales to net operating earnings. Standard sales are the sales of the standard product. The sales of the standard product, like the sales of the deluxe products, are broken down into four categories: consumer sales, intra-company sales, intercompany sales, component usage. Consumer sales are just what you imagine. They are the value of sales to consumers in the different areas. Intra-company sales are sales from one area of yours to another area of your company. So when I sell this amount, this is bought by another company. That's how it works. I may sell to myself, and we will see later how this comes in. We see that better in the MIS report. Intercompany sales are sales from one company to another, and then component is the value of the component used in the production of PCs, so the value of chips used in the production of PC. Then we have a last line, which is the cost of goods sold. That's the value of the products that we have sold that gives us the gross margin. The value of sales minus the value of goods sold give us the gross margin. The gross margin here is substantially higher in PCs than it is in chips. Then we have no deluxe sales whatsoever. This company hasn't sold any deluxe products. So we take the total gross margin as exactly what was the gross margin of the standard products. And then come the operating expenses. Operating expenses are broken down further in quite a few categories. Number one will be commercial and admin. Commercial and admin is straightforward the cost of distribution, either the commission of agents or the cost of operation of your sales offices. What we see here is you only have commercial and admin cost in the second column, which is the PC column. Then that means this company is only selling PCs. So it's using the chips into the production of PCs, and therefore doesn't have any commercial and administrative charges regarding chips. Advertising is what this company is investing in the different areas, which, by the way, is not so much. These are very small amounts. Transfer cost is what you pay when you are sending goods to another area. So when you do that, if you sell products to another company, you will be charged for the freight, either surface or air freight. And this is calculated by units. You have in the data log of the executive guide the details of how much it costs according to the volume that you send. Inventory charges are just the cost of carrying an inventory. Again, this is in the data log. It's a per unit cost. Sales expediting, that happens when a company is selling business to business goods that it doesn't have. Then Nippon will come in, do the delivery so that the client is sure to have the goods, and then a charge will be put on the supplier who has made a mistake of selling a good that he didn't have. Methods improvement is what is explained in the form F2. It is an investment that companies make to maintain the productivity of their factory at a decent level. Depreciation and fixed is the cost of depreciation of your fixed assets. So presumably you would have that when you have factories, for instance. Only when you have factories, in fact. And then this is a total of net operating expenses, and then together with the other expenses taken from the gross margin, you will come to the net earning from operation. There is a little bit of earning from operation in the chip, so this number is just the sum of the chip column and the PC column. The same goes for the other area. And then there is, of course, no column for Liechtenstein because Liechtenstein does not operate as a normal business. But then we have the consolidated column, which turns everything into Swiss francs. Again, this is a pure calculation. Don't count on it to be real cash or real anything. This is just an accounting data.